Okay, so when we talk about wages and salaries, think Linda Larper. Linda works for Planet of the Grapes. Wages are not only the money that Linda actually receives, but also any money that is available to her, even if she doesn't physically have it yet. This is what the IRS calls constructively received. Okay, so if Linda's employer delivers her bonus check on December 31st and it's sitting in her mailbox, even if she doesn't deposit it until January, that bonus is taxable this year because it was available to Linda before year end. All right, so this is what the IRS is considering as constructively received. All right, so what counts as wages? So here's how I want you to classify Linda's wages. This is going to include the money that Linda actually receives. It's also going to include the money that she constructively received. All right, this can also include property. If she receives that instead of cash, that's going to be taxed at the fair market value. Bargain purchases. If Linda buys something below fair market value because she works at Planet of the Grapes, that discount is going to be taxable. Guaranteed payments. So if Linda is instead a partner within Planet of the Grapes, that guaranteed payment that is delivered to Linda is going to be fully taxable, just like any wages would be. And services. If someone performs a service for Linda instead of paying her cash, that fair market value is still going to be taxable. All right, so the big take. What's going on? My name is Joey, and I'm the founder of Universal CPA Review. You're probably here because you're ready to pass the CPA exams once and for all so that you can advance in your career and move on with your life. Let me be the first to tell you that I've been there and I feel your pain. But I'm also here to tell you that the CPA exam doesn't have to feel like such a maze, and there is a path to a passing score. So what are you waiting for? Don't waste any more time. Commit to the process because it will pay off. In my opinion, I say let's knock out the CPA exams once and for all. Takeaway here is if Linda got value because she worked, the IRS will want to tax it. All right, so diving a little bit further, starting with property compensation. So if Linda gets property instead of money, we don't tax the employer's book value. We're going to tax what Linda actually received in value, AKA the fair market value. Okay, so if Planet of the Grapes gives her wine inventory worth $3,000 as a bonus, that $3,000 fair market value is what's included within wages. All right, so now diving into bargain purchases, guaranteed payments, and services. All right, so if Linda buys an asset from work below the fair market value, the discount is going to be considered taxable wages. All right, so as mentioned, if Linda was a partner instead, guaranteed payments to her are always taxed as ordinary income, no matter if the partnership had profits or not. And if Linda receives services instead of cash, right, the fair market value of the services she received gets taxed just like it was wages. Okay, so the IRS doesn't care whether compensation comes in dollars or bartering. They treat them equally. So diving into a quick example, Linda makes a $100,000 salary and has a $1,000 bonus check that was delivered on December 31st. Linda wasn't home to pick it up. She still pays tax on the bonus this year. All right, so her total taxable amount will be the full $101,000. This is constructive receipt in real life with Linda. If the IRS says she could have picked it up, then it is going to get taxed that year. All right, so the next example. Now pretend Linda is in a partnership called Peter Pan. All right, so Dick gets a $100,000 guaranteed payment. Then the partnership distributes profit to Linda, Dick, and Tracy, right? They each get $100,000. And then Dick buys a company car worth $300,000 for only $180,000. So he's going to recognize the $120,000 taxable bargain purchase income, which is the difference between the fair market value and what he bought it for at $180,000. All right, so you will see this exact structure constantly on the exam. All right, so guaranteed payments, always taxable as ordinary income. Bargain purchases, it's going to be the fair market value minus the paid amount. That's what is ultimately taxable. All right, so the next example. So same logic. Tracy receives legal services valued at $10,000 and property worth $50,000. The total taxable amount is going to be the full $60,000. Fair market value always wins. All right, so that's the fair market value of the service plus the fair market value of the property that she received. So now we're moving on into the third step of our gross income mental map, and that is partially taxable gross income items. So this is partially taxable employee fringe benefits that we're going to dive into. All right. So usually this is going to include certain employee fringe benefits where some portion is ultimately taxable. All right. So what are fringe benefits? Linda receives a salary plus perks like insurance, a company car, discounts, education, reimbursements, gym membership. Those are fringe benefits. Okay, so the question is which ones are tax free, partially taxable, or fully taxable? Fringe benefits are simply compensation that isn't cash, and Linda still might owe tax on them depending on IRS rules. All right, so thinking about which fringe benefits are taxable. Okay, so as an example, fringe benefits in action. Linda Larper works as an accountant for Planet of the Grapes, a wine distribution company. In addition to her $70,000 annual salary, she receives several fringe benefits from her employers, such as health insurance, right? If her employer pays for Linda's medical plan, company vehicle, right? Linda uses a company car for both work and personal errands. All right, so he's going to recognize the $120,000